time and time again, I hear so many people saying, I want to get rich now. I want to make money quickly. What stock should I buy? What share could I buy? Listen to this miracle idea. It just makes me chuckle because it's so far from my own investment strategy that I really cannot see how you would want to choose the quick, rich method over the long-term low risk. For me, my plan, yes, is different to a lot of people, but it is working. So by watching this full episode, I'm going to explain to you my strategy, how it's working, and how safe and boring money really is the key to financial success. Okay, so I'm going to get straight to it. My name's Future Investments. Some of you will be regular viewers of my channel, but if you're new to this channel, this very first video here, welcome. I'm a content creator and I've been investing properly for the last 3 to 4 years. I've invested in commodities such as precious metals since around 2020, so around 4 years, but I've been heavily investing for the last 3 years or so, and it's proven to be very successful for me as an investor. Now, my own strategy is not to get rich quick. It's not to make money overnight. It's all about building generational wealth through protecting my investment portfolio with multiple different investment vehicles, and through also building wealth through compound interest and through generating passive income. For me, that's the way I see my future, and it's the way I see I'm able to build longevity into my financial freedom. Now, a big factor for me is, I try to remain debt free. I try to make sure I'm in the green. And when I say the green, I mean with zero debt. So I try and limit my liabilities. A good book to explain liabilities is Rich Dad Poor Dad by Robert Kiyosaki, a fantastic book. It was actually the very first financial book, or book in general actually, that I ever read. And it changed my mindset to the game of investing. Now for me, I really do try and monitor my liabilities versus my assets. You can create a column if you like, called the liability versus asset column. And essentially what that is looking at what your outgoings are versus your income. And you can start to weigh up, hang on a minute, why am I paying for all of these things that aren't really adding much benefit to my life? And by doing that simple method, wow, does it really have an effect on your own finances? And by implementing changes like that, it really allows you to start adding more money, more capital into your investment vehicles. Now, I have multiple different investment vehicles. I've spoken about them before, but I'll go through them very quickly. I have precious metals, commodities, gold and silver bullion, index funds, the S&P 500, the FTSE 100, which is the United Kingdom's economy. Essentially, it's the English version of the S&P 500, Standard & Poor's index fund. And I'm trying to build generational wealth through passive income. One of those passive incomes is currently YouTube, which is starting to build up nice now, and it's really proven to be a good investment of my time, despite the beginning of it not being worth my time. And I'm also looking at investing in rental properties for passive income and to build wealth through building equity in the values of those properties. Now, for me, when I hear people talking about getting rich quick, yes, everyone wants to get rich quick. Who doesn't? You want to be rich now, don't you? Let's be honest. But it's just not realistic. When I read a book by Andrew Craig on how to own the world, talking about owning multiple investment vehicles, multiple sectors around the globe to really diversify your portfolio, to spread your risk in case of, economic downturn. And for me, Andrew Craig said a great point. He said, the hare investor usually never beats the tortoise investor. And what he means by that is someone who's trying to get rich quick may have some intermediate successes. They may get a few profitable investments if they get lucky or if they make a good timed investment. But generically, they're not going to make that consistently over a long-term basis. Whereas the tortoise investor, the long-term investor, is going to make those gradual increase builds in their investment portfolio. They're going to be looking at returns of 10% throughout a year and more if they're making wise investments and really building that wealth through compound interest. And for me, that's my strategy. And yes, I would like to get rich quick, but I have to be honest, I've stuck to my plan. And yes, it is boring. building wealth over a long-term plan is boring. You don't get to see those massive spikes like you might do if you try and buy a stock and hope that the timing's right and you really make some income. It doesn't happen like that with long-term wealth building. It's gradual. You almost don't see it. You almost become accustomed to the growth of your portfolio. I find myself often looking at my index funds and I'm kind of blurred by the amount that I'm in profit by, because for me, it's so gradual that I'm not seeing a huge change. But the idea is, by a long point of time, eventually you're going to notice that, hang on a minute, I'm in this much profit, an astronomical amount. I didn't take much risk, and I didn't even really notice the incremental amounts of money I was adding to it on a dollar cost averaging basis. Fantastic. I mean, it's a win-win, isn't it? So for me, I love boring money. I think boring money, boring investments is the way forward. Now, don't get me wrong. I'm not pretending I know the answers to everything. I don't. And everyone's individual circumstances are going to completely differ. It all depends on your goals, your timeline, and the amount you can invest. It's so different for everyone else. But I'm just sharing my journey of how my so-called boring investments have proven to be extremely lucrative. And I'm only really on the start of my investment journey. I've got decades left of investing to go. So it's really exciting to think what the future could hold. And I'm so happy that I've diversified as well. I think that's a massive key takeaway of investing. Whether you're a short-term or a long-term strategy investor, I believe that you really should have diversity in your investment portfolio. I mean, we're talking about precious metals, we're talking about gold, preserving your wealth, hedging against that inflation. We know that when there's economic downturn in the markets and there's war, precious metals tend to spike. It's a safe haven asset that people run to protect and preserve their wealth. In the meantime, when the markets are strong and interest rates are high, you can use those index funds. You can use those company bonds. You can use those shares. You can use all of these different investment vehicles to build wealth. So there's so many different ways to it, but diversification is key. I find that by owning a few different corners of the world really is helpful, because it gives me reassurance that if the UK economy is to crash, I can rely on the US economy. Right now, I am trying to look at delving into maybe parts of Asia, because I am limited and I don't have that exposure to the Asia part. I don't have the exposure to that. And for me, I don't have that exposure to that part of the world in Asia. And I feel like that's a bit I'm missing out on. I'm also looking into maybe getting into, bonds and other investment vehicles as well. So I'm always trying to figure out what else I can add to diversify my portfolio and to help build incremental wealth over a long period of time. You haven't got to have a lot of money to start investing either. I mean, yes, there might be a lot of bullion in front of me here right now, but that doesn't mean you've got to start heavy. When I started investing in bullion, I started buying 1 gram gold bars, and the journey has taken me to where I am today. So I think little consistent incremental movements throughout your investment portfolio and period are key. And before you know it, you would have built up a very nice, safe and secure portfolio to rely on, whether it's for wealth now or for a nice retirement pot. Thanks very much for watching. This has been my video on why my investment portfolio is boring, but why I actually like boring money, long-term boring investments. Thanks very much. I hope you enjoyed it, and I'll see you in the very next episode. Bye-bye. Thanks for watching till the end of the episode. One final point I wanted to add is, it's not really boring, is it? Because if you're making a lot of money, you're yielding great results, 10 to 15% or more, you can't really call that boring, can you? Well, thank you for staying till the very end of the episode. I really appreciate your valuable time. For that, I just wanted to let you know about my channel membership here on YouTube. You can join the exclusive club by becoming a premium future investor. We've got a fantastic amount of people and club members in our exclusive club as of now, and I must say it's great fun. Not only do you get priority reply to all of your comments on YouTube, but you also get exclusive behind the scenes content. Most recently, I did a full investment portfolio reveal. That's right, I included everything from my precious metals, my cash savings, my property, and my index funds. So if you are wanting to see exclusive behind the scenes, joining that club is possibly a great venture for you. Not only that though, but you do also get automatic entry every single month into fantastic gold and silver and precious metal prize giveaways. So for your chance to be entered, join the exclusive club and come and say hello. It's a fantastic place to be, and I really hope to see you there.